We're going to be going over 4 monthly paying dividend stocks and ETFs for you guys. And a lot of people love dividend stocks, they love dividend income, and monthly paying dividend stocks are pretty satisfying because you're getting that money, the income every single month, and it's really satisfying, even if it's not a lot initially. As long as it's compounding, you're reinvesting your dividends every year, you're going to be making more and more. So a lot of people have been saying, what's better, monthly paying dividend ETF or a quarterly paying dividend stock or ETF? And the answer is going to be a monthly paying dividend, just because it's going to be able to compound a little bit quicker than a quarterly paying dividend ETF. And we're going to be going over the numbers on our compound interest calculator right here. So we have an initial balance of $10,000, just a simple, easy number. This is all just a test scenario. Interest rate, we're going to say 5%. There's some dividend ETFs that pay more, some that pay less. And we're going to do a 40-year time frame, compound interval, 4 years, quarterly. So this is going to be our quarterly dividend ETF or stock. And we're going to be doing a deposit amount of about 500 a month. And we're going to do 500 a month because that's going to equate to $6,000 per year, which is the max contribution limit you can do for a Roth IRA. And if you don't know what a Roth IRA is, you definitely should look into it. It's a tax free account, but you cannot withdraw your money before the age of 60. So that's the downside of that. But your money grows tax free and you can do as many trades as you want in that account. Very, very powerful tool. So let's calculate this right here. And as we can see, because it's compounding and because we're saving our dividends and reinvest it every single 3 months, because this is the quarterly one, our effective annual rate is actually going to be 5.095%. So it is going to be higher than that 5% just because it's compounding every 3 months. And our future investment value is going to be 831,000 and our total interest earned is 581,000. So let's calculate the monthly one right here. We have the exact same scenario pulled up, but we do have the monthly intervals. So it is going to compound a little bit more. And as we can see, we are going to get a little bit more money, 836,000 with an effective annual rate of 5.116%. So it's only a difference of about $5,000, but it does have a little bit of difference as we can see. So you are getting a little bit more money, even though it's not that much more. But a lot of people saying that it's exactly the same thing. But no, your money compounds even faster with a monthly paying dividend ETF. So let's get into the 4 stocks right here. First one is going to be Main Street Capital, very, very popular one with dividend investors. It is a real estate investment trust. So we are getting a pretty high dividend yield of almost 7%, and they are paying out monthly. So you are going to be able to capitalize on that. And if we could take a look at the 5-year chart, it is doing pretty well. It's not really focused on growth. Real estate investment trusts, they have to pay out their investors a large sum of money, so they don't have much investment wiggle room there. But you are going to get some reliable income, in my opinion, and it's a great way to diversify your portfolio with some real estate properties. So this is a pretty safe one, in my opinion. You're getting a pretty high dividend yield, and you're mainly investing in this stock for the dividend yield because the stock price is not going to be moving too much. So this is going to be one that I am personally going to be investing in, and we're going to be polling you guys, asking you some questions of what stocks we're going to be investing in, because I am going to be building a dividend portfolio, and you guys are going to be able to help me build that up and have some influence on it. So the next stock on our list is going to be SPHD. And as we can see, I am selling options on it. Option selling, cash cure puts is a great way to get some additional income in addition to dividends. We will go over an option selling in another video. But for now, SPHD is the Invesco S&P 500 high dividend, low volatility ETF. So this stock does not really this ETF really doesn't move too much. As we can see, the lows from the March crash was around $27. So it really didn't get hit too hard and it's already recovered. But just like the other stock, we're investing in SPHD mainly for its dividend yield and mainly for its monthly paying dividends. So this stock pays around 4.52%, which is significantly lower than Main Street Capital, but this is a solid ETF because you're getting the lowest volatility, high dividend stocks from the S&P 500. That's what this ETF is designed for. So it's a very safe investment in my opinion, and you are getting some monthly dividends. And you can even collect a double dividend, and that would be doing a strategy where you involve buying 100 shares of this stock, or any stock for that matter, and selling covered calls on it, because you're going to be getting that monthly income from the dividends as well as that monthly or weekly income from the covered calls that you choose to sell. So you're getting double the money, and that's going to help grow your portfolio pretty fast, in my opinion, if you do it consistently. So let's move on to the next stock. The next one is going to be EPR Properties, ticker symbol EPR, which is another real estate investment trust. And this one's paying an 8% dividend yield. So pretty high dividend yield. If you can get 8% per year, that's going to be pretty amazing in terms of a compound interest. And it will help you grow your portfolio as long as you invest a few $1,000s per year. So if we take a look at the chart, it's not as great as MAN, but it is at a pretty low price right now. So you can get away with taking a little bit of gamble, waiting for the stock price to recover. They invest in a lot of entertainment. So they have like casinos, theaters, and stuff like that. So if you are into those types of properties, EPR is definitely a choice for you. And last but not least, we have a dividend ETF for our last choice. It is a monthly paying dividend, of course, and it is the Global X Super Dividend US ETF. So it tracks an equally weighted index of 50 high dividend, low volatility securities, pretty similar to SPHD, and it does have a high dividend yield. So 7.18%, significantly higher than SPHD, and it's pretty solely for the dividend income. As you can see, it is trending backward, back up, but when it falls pretty hard. It went from $23 per share to about $11 per share. It's negative 52%. But there's a lot of upside potential with it. It's still recovering. It still hasn't gotten back to its pre-pandemic levels. So you can try and capitalize on the high dividend as well as try and capitalize on the stock appreciation that this stock or ETF definitely has the potential to do. So that's about it for this video, guys. 4 monthly paying ETFs, and we also went over why monthly paying is favored over quarterly paying.